And just following on from that, I would very much like to invite Frank Salzgeber to talk about the decade of space. Can you hear us, Frank?
I can hear you clearly. Thank you so much.
Frank is Head of Innovation and Ventures Office at ESA. Lovely to see you, and we very much look forward to your talk now.
Yeah, and I'll keep it pretty short because I have not prepared slides, which I'm normally doing, but I think we have seen a lot of slides. First, we are thrilled that we are partnering with the colleagues in Luxembourg because that was a white dot, and especially also that this center is specialized to one point. I'm working at the moment on a brief for our Director General for the European Business Angel Network Annual Congress, and also this is a partnership which we have done over a decade. Because it's very important when you have startups, especially in the beginning, to support them when they are kids. And I always explain it a little bit, sitting at the moment in the mountains between Austria and Germany on 1,000 meters, and just 2 kilometers from here, one of my sons, Johannes, he was 5 years old when he was going the first time the red slopes. And I don't know if you're skiers, but some of you may be, but for the others which are not skiers, you have blue slopes, which is really the beginners, the easy one. The red one is already tough, and the black one is really if you want to kill yourself. So, and this picture shows my son was 5 years, and he's still smiling after a day of falling down, standing up, falling down, standing up, which was making me as a father, was making me very proud. And I think this is a similar role what we have to do with our startups, because we become not maybe like parents, maybe like an uncle or like the good mother or good father. We're helping them on their journey. And therefore, it's so important to have local embedded people like Technoport, and with Diego, the CEO, I'm working, I think, over a decade also. They have great knowledge with business, because also what we learned that a lot of companies which we support, they don't have really a technology problem. They are brilliant engineers. We have to look to the business model. So this is the reason why we set it up, I think 17 years ago, the ESA business incubation activity. And now with Luxembourg, with ESRIC, we have the first specialized partner, bringing also the deal flow to Europe. And especially in the beginning, it's very hard. And I said with the skiing, if somebody falls down, it's the same like when you're learning the bicycle, you need somebody in the family who say, come on, try it again, stand up, and you fall down, and somebody helps you again on the bicycle, on the skis, or maybe on the skating shoes. And I think this is our role. And this is what we have government, as multi-government organization, as ESA have to do, because then when we do everything right, we create companies which fly. And the Irish have a very nice saying, which I always quote. They say, on the shoulders of the giants, you see further. So our role is to play the giants, to let and get the startups, the crazy, the good ideas, the round squares in the round holes, to get them on our shoulders, that they see further, that they see what can be done. And there's not only one pair of shoulders, there are many pairs of shoulders. We have to put it together. And this is the partnership we do with our colleagues in the Luxembourg Space Agency, dedicated, of course, to space resources. And when we have done that right and helped the de-risking and creating the right companies, then the VC community really can take over and further do the investment. Because in that early stage, at least we as ESA, we don't take a share. We nanny them. So always saying, I try to play the nice uncle with a little bit of money in the pocket and the right address book, and Roberto and the rest of the team is doing the same. So it's very important that these handshakes are very go together, and because especially in deep tech is hard. Hardware is hard. It's not something that you program and it's done, the application in a half a year. Especially the projects we want to do with space resources will take time. You know, we want to hammer a hole into the universe. It's not so easy endeavor. And therefore, I think you need partners for a little bit longer. And this we want to do with the partnerships, and we invite everybody to support ESRIC in that endeavor. We're very thrilled, and I think we'll have our own opening for these incubation or a startup support part, because it's not a business incubation center. It's really specialized to ESRIC, where we help all European companies to think and hopefully lifting off, because as I on my mug, we all need, now you see it, we all need more space. And I give back to you. Thank you so much.
Thank you so much, Frank. That was very much to the point, and I think I can see your ski goggles just on your face. You've definitely got a tan. And it was a wonderful analogy there with your son and his skiing prowess as to how to muster on when you fall down, get up again. Thank you very much. We do have a question on the chat, and just on that point, we're going to have a panel discussion with all of our speakers at the end, so I'm going to try to monitor the questions so that I can fit as many as I possibly can in to that time at the end. So rather than asking the speakers questions directly after their talk, keep adding to the questions. You've been wonderful on the chat, and I will try to ask as many as I can in the 30 minutes we have at the end. Next speaker, thank you very much, Frank, thank you, and stay with us. Next speaker is Michael Mealing, the General Partner at Starbridge Venture Capital. Michael, are you there? I've got a wave saying he isn't there. Okay, we'll move on to Bruce Kahn. Have we got Bruce Kahn? I have a thumbs up. Bruce from Stanford University. I'm hoping that you are there now.
I am.
Wonderful. I'm so glad. Standing in to breach the previous gap. The floor is yours. You're going to talk about financing space as critical infrastructure beyond impatient venture capital.
Yes, and I hope you see my slides. Yes?
I can't see you.
Can you see my slide?
Neither at the moment, but I'm quite sure both are coming. Yes, slides. Slides are there.
Excellent, excellent. We have used space technology well. So thank you, everybody. Thanks for inviting me to wake up early here in Palo Alto, and greetings from Stanford. I do think we need to take up the topic of financing space as critical infrastructure, and we need to think beyond what I've called impatient venture capital. We need venture capital for all the reasons Frank and other speakers have talked about. And if it's critical infrastructure, if space is going to serve humanity as critical infrastructure, then we need to be very innovative in the financial engineering as well as the aerospace engineering. And aerospace and the technologies to get to space get a lot of attention. I'd like to pull your attention to the financing for these business models. And when I say financial engineering, I don't necessarily mean the kind of and I certainly don't mean the kind of abusive finance that we've seen from time to time, certainly in the States and elsewhere. I mean responsible financial engineering. And it bears in mind, I think, that the public thinks much more goes into space from national budgets than actually does. And so there's a need to find money for the space innovators beyond government budgets, and I'm sure Issa could attest to that. Thankfully, and I know Carissa will probably update all of this, space is attracting a lot of venture capital, and that's good news. And yet, it also is important to realize that venture-backed startups, not just in the space industry, but generally, they don't necessarily become full companies. They don't become unicorns, meaning valued at over $1 billion. There's a filtering process. There are different types of money. And I think we have to understand that the asset lifespan of space assets need to be matched to the financing for those assets. You would not build a bridge or intend to build a bridge based on venture capital or angel money. And what the financial systems do, whether you're in New York or the bourses there, you transform risk, return, asset type, and maturity of the investment. So the same asset may be represented in finance at different stages of its lifespan in a different form of financial instrument. We rely a lot on CubeSats, and more. Thank you, Isa, for the graphic here. Imagine a Rubik's Cube of financing, where you twist and turn it based on the maturity level, expected maturity level for the technology that you're pursuing. And it might look something like this. And then even continue beyond the border of an IPO or a public offering to the debt to support the growth of those companies. Well, we talk a lot in technology about technology readiness levels, TRLs. Occasionally we talk about MRLs. Can you manufacture what you can produce in a prototype? IRLs, investor readiness levels. And then for reasons that you'll hear from me, I've needed to come up with commoditization or commodity readiness levels. And these readiness levels are not just benchmarks for purposes of the teams in figuring out who they should, what technical issues they need to deal with, or what business model creation issues they should anticipate. It's also for the investors. And investors include people like banks and private equity who hold the debt issued by these kind of companies. As I suggested, and as you could read in the report that I'm referencing in the slide, I've been, for some years, pushing forward creating a space commodities exchange where there are 5 buckets of commodities: raw materials, something you might find in situ; processed goods from those, let's say the regolith to build with; services, of which we have an awful lot in LEO, and we're getting many more, the bandwidth, debris removal, launch, etc. Financial derivatives of the first 3, so a swap, for instance, does the launch happen or not happen, can relieve some of the stress on the equity that's raised by a startup space company. And then financial indexes. How do people who really don't understand space technology invest in the lunar economy? They could buy an index. The point of showing you the space commodities exchange work is that when there is a standard for launch or a standard for robotic transport, or whatever those standards might be developed by the exchange and its members, that standardization and that interoperability and predictability of where supply and demand meet in the future for those commodities makes it easier for investors to have confidence that whatever the technology is, there's actually going to be a customer base to use it. Investors are seeking infrastructure returns, and those returns have been significantly positive over the last decade. So we know on Earth, infrastructure has an investor cohort that seeks to support it. I guess what I'm asking is, what if we create this infrastructure investment structures for space? Also in the report I'm citing that I co-authored with my friend Mir Sadat, we suggest that we should have space bonds or something akin to it to finance space as critical infrastructure. Here you see the bonds that were used in 1929 and later for the Golden Gate Bridge and also for the New York Railroad. So you would not start an infrastructure project such as these without the long-term commitment of bondholders to the original budgets and then the additional budgets. I just want to basically close with the notion that there's a lot of wealth out there looking for a home, looking to invest in things. And if we think of space as critical infrastructure, then venture capital is good, but it's certainly not enough. And with that, I'll pass it back to Zoom Central. Thank you.
Hello, it's lovely to see you. Can you see us here?
I can, yes.
Wonderful, wonderful, because we didn't have the joy of seeing your face for the majority of the talk. So it's great, and thank you so much for being with us and talking about those various important potential future financial models, such as the bonds, for example. We'll see what the future will bring. Stay with us, because we do have the panel chat at the end. Now, we do have Michael Mealing with us, the general partner of Starbridge Venture Capital. Michael, I saw that you were present on the chat. You're present with us now?
Yes, I'm here.
Super. Over to you.
Thank you. Start my video. Yes, and I'm assuming that you can see my slides, correct?
Almost. Yes.
Okay, great. I think it's quite interesting that a venture capital fund is coming after Bruce, considering that we do early stage capital. But I do agree with Bruce that there are roles in space resources for other forms of finance, whether it's long-term development finance or from investment banks, debt. I even think that there's probably a role for some crypto-based financing tools out there that I know some people are starting to take advantage of. But that said, one of the things that I spend a lot of time talking to entrepreneurs about, especially in this particular area, is even if you're talking about things that venture capital doesn't do, which is generally anything where return on investment stretches past a 10-year period, which in a lot of cases you find in oil and gas, extraction, mining, other types of applications that are more commodity oriented. You still have the problem of who the customer is. And so one of the things I'm going to talk about a little bit today is how to think like an investor and think like a customer. One of the key things for an investor is whether or not, and I am no longer sharing my screen, is the expected repayment period and return on investment match the investor's assumptions? And I would leave any entrepreneur that's looking at doing a business in this space to do their own investment return analysis. Look at your business, look at it honestly, and then do the ROI calculation. And specifically not an ROI, but do it in terms of what we call internal rate of return. Internal rate of return takes into account when you actually realize the gain in your investment. And that's one of the things that we struggle with in the space sector is a lot of the things that we talk about do stretch beyond most investors' timelines. You get into the world of what a lot of development banks, infrastructure banks, and even in some cases mining-oriented finance, where you have multiple rounds of debt with different financing terms associated with them to deal with the fact that it could easily be 20 to 30 years before the final value of what you're building is realized. So the first thing that an investor would love to see is an entrepreneur that is honestly looking at the period at which they can actually begin to realize a gain for the investor. One of the other key pieces that an investor likes to look at is, especially in this sector, how well do you know your customer? And I think this is one of the challenges that we have when it comes to space resources, because right now, most people in the space resources world their ultimate customer is a government agency, whether it's ESA, NASA, JAXA, or at the state level within ESA, a national agency. One of the things that I strongly suggest that entrepreneurs do is use the business model canvas to be able to lay out exactly what your business model is. But one of the things that we've started to use within Starbridge is something called the partnership canvas. Because the thing that we are very much sensitive to is not just what your business model is, but what does your customer think your business model is? And really, what is your customer's business model? And even then, what is your customer's business model? And what is your customer's business model? Because what we're trying to figure out is, and this is a problem that we do see in space resources quite a bit, it's what I call a circular economy, and not in the sustainability sense, but in the sense that you have space transportation companies wanting to provide fuel to customers. So they want to extract resources from the moon or somewhere else to provide transportation fuel that they then sell to another transportation company that's moving this material somewhere else. But what you rarely ever find is someone who actually wants that ultimate material. So for example, one of the early business models was moving things from LEO up to GEO. Well, there are very few companies actually launching anything to GEO anymore. So you're selling into a very limited market that may not be able to sustain your business. So I challenge everyone looking at space resources to go through the exercise of doing a business model canvas, not just for yourself, but for each entity in your value chain until you can come to what we call the ultimate customer. Who actually wants to do something in space that needs your resources and why? And you'll know this when you get down to some very fundamental human motivations about why someone wants to do something in space. They want to live there. They want to raise a family there. They want to get rich there. They want to visit. Or there is some resource up there that they want to bring back here because it solves another problem, such as it saves people's lives. It allows them to eat better food at a cheaper cost. Find those fundamental human motivations, because that's what's going to drive the entire value chain. Because ultimately, if we can't find a customer that's willing to throw buckets of money at us to solve a problem, then the rest of that value chain doesn't work. So be very realistic about who your customer is, and when you can get to a business model that generates a return on investment that you would be willing to recommend to your grandmother. And do that honestly and clearly. So I'm probably a bit of the contrarian on the panel, but I do see a significant investment problem within space resources is we are dancing around who the customer is. The reason that Elon is doing what he's doing for building Starship and going to Mars is because he has an extremely clear, crystal clear idea of who the customer is. It's human beings that don't want to be on Earth anymore and want to be on Mars permanently. He's building a city there. His customers are human beings who will give their lives to go live and build a future on another planet. That's a basic human motivation that those people will spend every damn dollar that they have to do. We need to understand these motivations, because if we don't, the rest of this entire value network does not work. Thank you.
Absolutely fascinating, and I'm just reading here online some compliments to you, actually, just to, if I can get up the actual person here, just bear with me 1 minute. Yes, Jeff Krukin, who is a principal and co-founder at Earth Space Commerce Advisors, he says, great point about understanding your customers, which is another way to increase your value to your customer and understand their sales challenges. And he says he's too seen many entrepreneurs forget about this. So fantastic. And do keep sending in the actual questions you would like to put to our speakers.